I've been on this journey of what I call being a heart forward leader. I didn't always
Hmm.
lead with my heart. I didn't always show up that way in
Yeah.
relationships and in life. And when I made that shift, amazing things started to happen for me and everything
Mhm.
opened up. And I have achieved this wonderful balance in life between business and relationships and sort of personal and spiritual wellness.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host, and I'm so glad to have you back listening to the show or watching if that's the case on YouTube, Facebook, whatever your favorite channel is. We appreciate you doing that. We got a great guest today, Shane Carter from one of the most awesome states in the country, New Hampshire. We were just talking about that and all the fun things to do up there and that whole Maine, New Hampshire, Vermont, guys. If you haven't been there, make it part of your list. You got it. It's just one of those must see places, must do places. There's so much to do indoors and outdoors. Awesome people, true patriots. And the old saying of the man of the mountain, I think Shane was, you know, when a dentist wants to promote what he does, he hangs a shingle from his office saying dentistry. When God created rugged men in New Hampshire, he hung out the stone mountain with the man on there. He said, in New Hampshire, we make men, so
That's right.
I
That's
love
right.
it.
Exactly.
So, yeah. So, in any case, if you would mind, Shane, uh, if give everybody a little bit of insight on, who you are, what you're about, and really, how did you get into what you're doing now? Because, a lot of us started off doing something else. And if you can kind of tie in that transition there for you, it'll give people some great context. And then we can dig into the what we call the meat and potatoes.
Yeah, yeah, of course. Absolutely. Gary, first, thanks. Appreciate being on the show. It's an honor to be here with you and your audience. So, my story is circuitous and we all kind of have that path we take. So I was born south of Boston in Massachusetts and studied forestry actually and wildlife biology. So I was been into land and the outdoors. Um, moved out west and lived in Colorado and Idaho and California and worked for the Forest Service. And while I was out there, I had this calling. I had this epiphany, if you will, that I was meant to be in real estate. And some of it had to do with the upward mobility potential within the U.S. Forest Service, and that wasn't going to be my ultimate potential in life. But some of it really truly was a calling, and I just sort of was drawn to real estate. And so I bought my first real estate course while I was living in Colorado and did my first real estate transaction out there. Just got a house under contract and wholesaled it and flipped it. And I thought, oh
Hmm.
my goodness, I just made so much money more than working for like 3 weeks, and I just did it with ease from following this program. Moved back to Massachusetts on Cape Cod, got my real estate license, became a broker, and worked there and
Hmm.
sold real estate, and I got to understand condos and developments and vacation homes, and even timeshares were big at that time in sort of the late 90s. But then I really got into, I was wholesaling contracts and flipping houses. And then I
Hmm.
discovered that I truly had a passion for construction and development. And so
Hmm.
that sort of home flipping as an investor turned into a general contracting career where I started a general contracting firm and started, building starter homes and then move up homes and then multi-million dollar luxury homes. And then got into community development work where I would take raw land, develop it, build the roads and infrastructure, put in the housing, did some
Hmm.
mixed use, some condos, et cetera. Those all being cash flow businesses. I always took the money that I
Hmm.
made there and invested it into income producing assets, predominantly multifamily, have my construction company fix it up, recycle our equity out through refinance, and continue to do that on and on, sort of, as my cash would allow. At first, it was a 3 unit, and then a 6 unit, and
Hmm.
then an 8, and then a 20, and then a 60. And I just sort of built my holdings according to what I could afford with my own investments because I didn't know
Hmm.
this was sort of 2003 and then into the crash, and then 9, 10, 11 we bought a lot.
Hmm.
And then really sold it all off 2017, 18, 19, sort of felt like it was the top. And I was
Hmm.
looking at, what am I going to do next in my career? And decided that we were going to venture out of northern New England and out of New England in general and get into the growth
Hmm.
markets in the South, Texas, Florida, Carolinas. And so since then, we've acquired a little over 2,000 units of multifamily, about 300 million in assets. And we also have a land development vertical where we take raw land, get it entitled and approved, and sell that off, or put in the roads and infrastructure and then sell off the finished pad sites to home builders.
Mhm.
And additionally, we have launched our first fund that is diversified into multifamily, land, and outdoor hospitality, because those are that's where we have experience and track record.
Yeah. Well, it's interesting. You're developing and building these kind of properties because of your background and interest in forestry. You're kind of playing into that, and it's so. What I'm getting at is it's interesting to transition. You're able to carry forward something that's a passion of yours and create a business out of it that supports you and your family. You're creating income producing assets. And by the way, you couldn't be doing it in a more beautiful place.
Yeah,
That's like the icing on the cake. So
yeah, it
um,
is.
yeah. Well, I'll tell you, let's dig in a little bit further. So one of the things you have a book, by the way, that's coming out. I understand it's called Optimize Your Life, and we're probably a month or two away from that being published, but that's okay. I wouldn't mind touching on it and getting people excited about it when it does come out. But one of the things I read was I think it was a caption that said, build and preserve wealth like a billionaire, and he kind of just gave a 60,000 foot view of that. Um, but can you clarify that a little bit more, and maybe talk about how you a little more detail, unravel the onion a little bit more about how you've been able to optimize your life, and how do you get that clarity in financial freedom too? I guess like a billionaire does. I mean, we all want to do that, but a lot of us just don't have that clarity. We're not optimizing what we're given.
Yeah, yeah. Look, that you're absolutely right, Gary. And for me, it's just simply been a very long and iterative process. And so I wanted to
Mhm.
write this book to, first of all, just sort of get out some of the things that have been rolling around in my head. And I wanted to sort of get out there, but also truly felt like my journey and my story and what I've learned along the way could be impactful and helpful to others that are somewhere along their path in that journey.
Mhm.
And so in a big picture view, the book is really an amalgamation of my experiences in terms of how to optimize yourself, because really there's no greater investment that you can ever make than in yourself. And what does that mean? And so what does investing in yourself mean? And how does mindset play a part of the individual success and then the cumulative success that we all have? And
Mhm.
so I dive into mindset, I dive into health and fitness. I'm very much into health and fitness and caring for the
Mhm.
body, but also into spiritual and relationship wellness, which is something that a lot of
Mhm.
people don't talk about. But I feel as I've progressed in my journey, the business part became, and we can dive into any one of these, but the business part
Yeah.
was sort of self-evident, and even the physical fitness part. I mean, it's that we, again, there's people write entire books on this stuff, right? But ultimately, it's simple. It's be consistent
Mhm.
and consistently eat well and exercise. It's simple as that,
Yeah.
right? You can make it as complex as you want, but that's the essence of it. Um,
Yeah.
but the spiritual wellness and the relationship wellness and the relationships that we have both with ourselves, our loved ones, our investors, our business partners, et cetera, that's the part that I really have been diving into and had been diving into prior to writing the book. And why I wanted to really get it out there is that I've been on this journey of what I call being a heart forward leader. I didn't always
Mhm.
lead with my heart. I didn't always show up that way in
Yeah.
relationships and in life. And when I made that shift, amazing things started to happen for me and everything
Mhm.
opened up. And I have achieved this wonderful balance in life between business and relationships and sort of personal and spiritual
Mhm.
wellness. And it didn't happen until I really unlocked those other parts of me that needed to be unlocked.
Yeah. Well, I appreciate you sharing that because it actually is. It's most people I met who I would consider successful. It's not just because they're financial in business and finance. They're successful in life in general, and they really do nurture their bodies, minds, and spirits. And I do the same thing. I mean, every morning I wake up and spend about an hour and a half in prayer and meditation, and then another hour, 15 minutes physical exercise before I ever turn on any phone or computer. And by the way, I get to exercise outdoors on the back deck overlooking the Shenandoah State National Park, so I mean,
Beautiful.
yeah, I'm with nature. And the thing is, I didn't always do that. When I was in younger 20s and 30s, I was building the empire, at least I thought I was. And I
Right.
was successful, but it's very limited. And it did cost me, in personal relationships. And I went through a divorce, and part of the reason is I wasn't present. And I
Yeah.
was a great provider, I had great vacations, but that's not what my wife wanted. So I really went on a journey to explore and develop. And I knew intuitively, Shane, I guess I was around 32. I remember thinking, I'm missing something. There's more to this
Yeah.
life than just going through these motions and following scripts and programs and stuff. And I went to one of my apartments, and because somebody had left and I was cleaning it out, and they left a book from Tony Robbins called Awaken the Giant Within.
Yeah.
And I
Great.
thought, what the heck? I hate throwing stuff away. I'll keep it. And I decided to read it one day, and I was hooked. I mean, that got me on the path of personal development. And Zig Ziglar, even had
Mm-hmm.
my own personal coach for a while, and really ended up reading about 3,000 books and I don't know how many training programs. And at the end of the day, what I'm getting to is this: is all the things that I can teach academically about, business and investing and so forth are meaningless unless you have that alignment, and if you're spiritually aligned in so that your goals are aligned and
Mm-hmm.
what you're doing is not just for you. If your vision is just for you, it's a small vision. If your vision is bigger than you and it serves others, and the more you serve, the better, you got a good vision. And usually, I refer to God as God, but some people call it creator, universe, whatever it is. I'm not sure we're worried about terminology, but the principle of it is it's like you're letting God speak through you and act through you,
Yes.
and you're simply a vessel. When you get that, just like Zig Ziglar said, help enough other people get what they want, you'll be able to get plenty of what you want.
Yeah.
And I'm glad I've realized that earlier on, because prior to that, I was just you know, going through the motions. So in any case, sorry to ramble, but um,
No,
let's
you're
keep going.
speaking my
That
language.
Yeah, man. It's funny. One of the things I love about these podcasts is I get to meet some amazing people, not just the audience. And
Yeah.
what's crazy, if everybody listening here, I want you to know this. Just write this down so you remember it. Everybody here that you're meeting on these podcasts, not just mine, but and for the most part, all of them are genuinely good people. They're here because they are servants. They have servants' hearts. They want to serve and they want to give. I know it's hard to fathom if you're not in a position to give yourself. It's all mindset. Just hang around with people like Shane. Get his book when it comes out. Read the book. Look him up online. There's projects you can potentially participate in. Um, Hang around other people who are where you want to be, and I promise you'll have a much better shot at getting there. So let's go ahead and go turn it back to you, Shane. Moving forward here, I guess let's talk about looking forward. Actually, if we're looking in the world of real estate and being in the right place, the right sector at the right time, and everybody tries to time things, it's very difficult. But do you see anything that I would consider like megatrends, investable megatrends coming down the road, say like in the next decade? Just it's not a test. It's just based on what we're seeing today. What kind of vision do you see for the industry and people wanting to invest? Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to realestatewithgarywilson.com, click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, Do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care.
Yeah. That great question, Gary. We study those mega trends, and we look to understand how the macro world is moving, and then we look for the trends in the micro, and then specifically into the MSAs and markets that we dive into. So we get really, really granular. But first, before you get granular, you have to understand how the macro tides are moving and shifting, or else your
Mhm.
granularity is sort of going to get wiped out by a tidal event.
Yeah.
And so some of the macro trends that we see are, of course, we are in housing, right? So we study
Mhm.
housing and
Mhm.
in economics specifically of housing. And I think you wouldn't take too many Google searches to understand that we have been and are going to continue to be in a housing shortage post great financial crisis. And everyone can talk about why that is and how that occurred,
Mhm.
exclusionary zoning and a massive, crushing blow to the housing development world from
Mhm.
2008, frankly, didn't even recover until, maybe 2014, 15.
Mhm.
And then we've created this massive shortage of housing, and that's not going to
Mhm.
change. Population dynamics, and understanding where jobs are moving, where people are moving. And even though we have, I'd say in the short term, right? So 23 was a 22, 23, and even into this year, was some of the largest multifamily housing production that has ever occurred, since the
Mhm.
70s. And so we had a huge cycle run up of overproduction. And that is really poignant and a bit of an issue in just, I'd say a handful of cities, right?
Mhm.
And sort of the Miami, the Nashville, the Austin, those types of cities, Phoenix to some extent, Dallas to some extent, again, neighborhood dependent, have just overproduced housing. However, we have seen massive absorption of that. And what we're going to about to see next is that again, supply has dropped off a cliff. And so we're
Mhm.
going to see 2005, 6, 7, 8, et cetera, where we again go into this upward trajectory of rent movement
Mhm.
due to simply supply demand imbalance. So that's a fantastic tailwind, not only for multifamily owner operators and asset owners, but also for single family developers and
Yeah.
the housing community, the build for rent, the BTR communities. We see that as a massive mega trend that's going to continue. Institutional capital wants and almost has an insatiable appetite for that because of the macro trends we see in housing. But also, we're just simply underproducing single family residences even for sale. And so,
Yeah.
again, on a micro basis, on a MSA, and even a neighborhood by neighborhood basis, you do have to get granular on this because all real
Mhm.
estate is local. But on a macro perspective, we are seeing dramatic underproduction, which is going to lead the largest producers of housing, which are the national home builders, are going to have some
Mhm.
huge tailwinds, I think, for at least the next 6 to 7 years, potentially another 10 years.
Yeah.
So I'll pause there because we could talk about a whole bunch of other mega trends that are out there in the
Yeah.
world, like nearshoring and why production is coming back to America, and we're relying less and less upon China, and what sort of tensions globally,
Yeah.
how that feeds a tailwind for domestic oil and gas industries and so on and so forth. But again,
Yeah.
we're mostly housing guys, so that's where I like to focus.
Yeah. Well, I tell you what, I really appreciate you sharing that. A lot of us are afraid to share what our opinions are because the world could change tomorrow. And it's like, holy crap, that's completely different. But I do 100% agree with you. I know what's ironic, Shane, is yesterday I interviewed an architect from Boston. We were talking, it brought up the same subject. And what's interesting, guys, is we often overlook architecture because we're dealing with the what's in front of us, what we see in front of us, the end result. But behind the scenes, a few layers in any development, anything that any municipality is looking to change, comes back to human behavior. So, for example, during the pandemic, more people were hanging out on their front porches again, like we haven't done in 2 generations, because in the 60s, television came out, and then the internet, of course, air conditioning came out about the same time, central AC. Everybody went indoors. all of a sudden everybody's back outdoors again, and it was awesome. It brought families back together. It was just an amazing time frame.
Mhm.
But so what this architect was saying is architecture takes they look at human behavior, social behavior, macro behavior, micro behavior, and try to determine how does that relate to needs and housing and office space and retail and industrial. And that's how they come up with the plans and the designs. And then so it all makes sense. That what he touched on though fundamentally was there's shortage of housing. Now I've heard figures from 4 million to 7 million housing units shortage. I tend to lean towards the higher side because I also still I'm a natural analyst. I got a degree in computer science, so I look at like the border control statistics, and they tell you right in there, this is just what we know from what the people we've contacted. There's
Yeah.
people that we never even met that crossed the border. So the architect mentioned, he said they're just being practical about it. He said realistically, it's probably more like 7.5 million. In any case, the question is, well, how do we address that? Because the vast majority of that need is affordable housing. And let's face it, builders want to build luxury homes. That's where the money is at. But at the same time, if we can create incentive programs like what was the one back in not the Biden administration, the prior administration, opportunity zones.
Yeah.
I mean, some cities fared better than others, but like Charlotte, North Carolina, I mean, absolutely one of the best programs ever. The city people will tell you this is one of the best things that ever happened. So things like that, we need more of those types of things to incentivize people to provide that type of housing. But we even got into like materials and construction, like tiny homes and modular homes and manufactured homes, things like that. That 50 years ago, people thought of them as mobile homes, but these
Mm.
are real honest to goodness office buildings and apartment buildings. If you look closely, you can see they were brought in components and almost like Legos kind of thing. It's just
Yeah.
amazing.
Like Lego blocks. Right.
Yeah. So
Yep.
so we're seeing all this, and so it's kind of the one of the keys to success is do you recognize and take advantage of opportunities? So this part of the discussion to me is vitally important. But what are some of the things that you see people making mistakes on or myths? What are like maybe 3 or 5 myths do you think that are out there in the world of real estate investing that we can kind of bust for? Maybe just take one.
So things that people are doing right now where they're missing.
Myths,
Oh,
myths.
myths.
Yeah.
Yeah.
So
Oh boy.
that's
Let's
that's
see.
that's my lifting. Yeah.
Yeah, great question. So, what are some of the myths that are out there? So, you know, I guess there's some myths that are out there about investing in real estate, and we also just went through
Yes.
a bit of a tough time, right? In terms
Mhm.
of the syndication world, and a lot of syndicators got over their skis and started taking on too much high leverage debt that was, um, that was variable and not fixed rate. And unfortunately, there are some investors there where their investments are at risk because they sort of put all their eggs in that particular basket. That's one of the reasons why we started our fund to be diversified, so that
Mhm.
a singular investment in our fund goes and hedges across no less than 15 different assets, right? So
Nice.
you have that massive diversification, which all investment professionals know and understand is a critical component. But I think one of the things that I see a lot of the accredited investors and folks that we talk to miss, and that is potentially a
Mhm.
myth,
Yeah.
is in terms of their allocations relative to real estate. And
Mhm.
so, I know
Yeah.
a bunch of guys and closely tied with the Tiger 21 group and understand sort of how the wealthy allocate their capital and their investments. And they're generally speaking about 20 to 35% in real estate, and another
Mhm.
30% or so in private equity, and then the balance
Yeah.
in public equities, cash, gold, ETF, whatever. So, most people we talk to aren't even close to that. They're more like 90+% public equity, stocks,
Yeah.
bonds,
Mhm.
and they don't even realize that there are intelligent opportunities to diversify and hedge that risk, and grow
Mhm.
their money intelligently without having it all in this one basket. And of course, financial advisors
Mhm.
will tell you that there's huge diversification in these public equities. Um,
Mhm.
but in general, if you're with a very, very high performing fund manager and hedge fund manager, yeah, you're going to get access to some amazing opportunities. But for most
Yeah.
people, they're just getting placed into these broad funds
Right.
that are trying to do this diversification thing, but they're really just macro investing in the market. And so when the market
Yeah.
goes down, like it just did, here the last week, substantial amounts, the whole market
Yeah.
goes up. And there's no
Yeah.
diversification, and there's no
Yeah.
non-correlated assets. Whereas,
Mhm.
investing across the housing trends that we invest in are very much non-correlated to public equities and even non-correlated to each other, right? So single family
Yeah.
development in Tampa has nothing to do with owning a multifamily asset in Dallas. They're just completely
Yeah.
different business models, right? So
Yeah.
we're just fortunate that we understand all of those housing investment trends.
Right. Well, I love the philosophy, and I'm a big fan of diversification too, even within a sector like real estate. I've obviously residential has been the biggest part of what I have, but I've also done retail and storage and things like that. But the other thing too is there's multiple strategies. Like, for example, we have one client in Philadelphia that had 900 units of student housing, and we helped him build the REIT and raise funds to buy shares of the REIT, and then the REIT bought his properties. So he's the principal of the properties. Now he's the principal of the fund. So he really didn't give up control of the properties. He just was able to capitalize on them. And then he incorporated his property management business to a separate entity that now was contracted to from the REIT to manage the properties that his
Yeah,
children ran. So it was an ingenious idea. So I just
fantastic.
want everybody to understand it. Yeah, a lot of people think real estate is, you got to have a lot of money. How can I afford another house? How can I afford a duplex? There's all kinds of ways to structure deals. And I've heard people also say, I'm going to wait because it's an election year. Rates are supposed to come down. All these things. I'm like, you shouldn't have the philosophy of wait and buy. You should have the philosophy of buy and wait because it's a long-term endeavor, it's long-term investment. But in any case, I love the fact that you do have a fund, and it actually has the word diversified in it. So it's the New Hampshire Capital Diversified Investment Fund, and I probably didn't get all the words in there. I know it's a long one, but was I
Yeah,
close? Am I close?
yeah. Except it's not. It's just Hampshire Capital.
Hampshire Capital.
Yeah,
Okay.
Hampshire Capital Diversified Real
Wow.
Estate Fund. Yeah.
Gotcha. Can you
Yep.
can you touch on that a little bit? Because we do have a lot of listeners saying they love real estate investing, but they're running three dental practices, for example. They just don't have the time to do what you and I do. That their thing is dentistry, where ours is real estate. But can they participate in something like that, even if they're in Idaho or Texas or something?
Oh yeah, and any U.S. resident, you have to be an accredited investor because it is a 506c SEC reg offering. So
Hmm.
accredited investor, we don't need to go into the definitions. You can just Google that. But yes, you do have to be an accredited investor, and our fund, the minimum fund investment is 100,000. It's a $50 million fund, which in the world that we work in is actually a small fund compared to a lot of the larger institutions in Boston, for example, that have multi-billion-dollar funds. But
Hmm.
we're investing in these really niche opportunities, and so yes, we're multifamily guys. So we are allocating a great chunk of the portfolio to multifamily. And
Hmm.
that really is our stable yield cash flow. And so we're predominantly looking for 2000 vintage and newer. So sort of
Hmm.
A and B plus class assets where we can fundamentally add value. And there's some
Hmm.
operating low hanging fruit or some distress, which as of right now here, we're going, Q3 going in Q4 of this year, we
Hmm.
are already seeing a tremendous amount of distress in this industry, and we're going to see
Okay.
more coming. And so we are very tactically and strategically looking for the very best opportunities. We say no to 99% of every deal that comes across our desk. And so
Yeah.
we only say yes to the ones that we know are home runs. And
Yeah.
in this environment, I think that's critical. I think people are going to start seeing this deluge of opportunity and deluge of distress, but we are still hyper focused on fundamentals and only
Hmm.
saying yes to assets that are irreplaceable and that we would own long term and that we know are going to have a fantastic value prop in 5 years or 7 years or 10 years. Even though
Yeah.
the fund life cycle is a 5 year cycle, we still like to look for irreplaceable, assets that we
Right.
would want to own long term, because we know that that's, and frankly, we're going to probably take a page from this other gentleman's book and likely exit some of the fund assets into our own REIT structure
Okay.
to recapitalize that equity and give the investors their returns, but
Yeah.
retain the asset for a long term on a lot of these. But the other two avenues and the other diversification that we have in the fund is land development, because I've been a land developer for 20 plus years. And we have a
Hmm.
very interesting pipeline and agreement with some national home builders in Florida and in some very high growth southern markets, where they give us a contract to buy the lots before we ever
Hmm.
close on the land and take an investor money. So we take a hard money deposit from them. So we really hedge and mitigate the risk in that development process by getting those forward contracts and essentially guaranteeing that, top 10 national builder has corporately blessed this contract and released a hard money deposit on it. Those are the
Yeah.
risk mitigation tactics we take when we get into land development, and we produce outsized returns. We are giving a 40% pref
Mhm.
return for our land developments inside the fund, which is,
Nice.
people say that's crazy, that's unheard of. Well, it's because we know what we're doing, and we've been doing this a long time, and we know how to structure things properly. So those
Right.
are those are usually 18 to 24-month turns. So in the fund, we expect to get sort of 3 turns of the capital that we allocate to land development completed through the life cycle of the fund. And then the third avenue is outdoor hospitality. So RV parks,
Okay.
campgrounds, marinas. We have a fantastic operating partner out of Colorado called Beyonder, and
Okay.
these guys are great. We love what they do and how they do it, and so we've got an asset in Alabama with them right now,
Hmm.
performing amazingly well, and we're gonna do more with them. And so the land development is in there for the total return, right? You're getting a
Hmm.
40% annualized return. The multifamily is in there for the stable yield, meaning you're going to preserve your value, and you're going to have, maybe a 5, 6, 7% cash on cash and a
Hmm.
mid-teens IRR kind of, standard multifamily. The outdoor hospitality assets are in there because of cash flow. These things are
Hmm.
10, 12, 15% cash on cash annual returns, plus
Nice.
a 20 plus, IRR equity
Hmm.
multiple. And they're really an undervalued asset class that we feel like has a lot of runway to it.
Yeah. Well, I'm familiar with those guys, and I love the model, and I also like the fact that it really doesn't matter which way the economy goes. In fact, when the economy starts heading south, more and more people are going to choose, outdoor venues for vacationing and stuff. In fact, I just did that. I told you before the show, I was up in Quebec City for the national annual um, New France Festival, and the
Yes.
people I was with wanted to stay at KOA because they had kids. I'm like, that's fine. I'm a scoutmaster. I'll sleep on the ground. I don't care. And
Yeah.
place was packed, and they
Yeah.
they not only had the nice movie theater area and the
Mhm.
pool and the dining area. They had
Yeah.
a
It's all about
spa.
those amenities. Absolutely.
Yeah, they
Yeah.
had a spa. I'm like, holy cow, this is way different than what I saw when I was a kid. So,
Yeah.
well, I tell
Yeah.
you
It's a
what, I know
massive
we're
lifestyle trend that took off pre-COVID, was
yeah,
exacerbated during COVID, and has
yeah,
remained super high since then. And it has
oh
no
yeah,
signs of going down. One of the largest cohorts of that sort of resident base or tenant base or lifestyle choice, actually
yeah,
millennials, right? So it's
yeah.
not the 55 plus, it's actually a bunch of younger folks too.
Yeah. Well, I know several people who actually basically just cashed in. They they sold the house, sold the business, and they're
Hmm.
traveling around in RV, homeschooling their kids and
Yeah.
exploring the US and Canada and loving life. And they're running a business from home from the camper. And that's what they're doing. And they might only do it for a few years, but you know what? Those kids have what an education.
Yeah.
So, any case, I know we're about out of time here, but I tell you what, this has been one of my most favorite podcasts, and I really am interested in the Hampshire Capital Fund and getting it out to people. So, how can people reach out to you? How can they get a hold of you, learn more about this? Because the fact that you decline 99% of your opportunities shows extremely strong leadership. And that's one of the key characteristics that we look for, Shane. So how can people find you?
Yeah.
What's the best way to get a hold of you?
Yeah, no, I appreciate that, Gary. I think our website's probably the best way to start to get into the ecosystem, learn more about us, check out the fund offerings, and get more information about who we are and how we operate. So it's hampshirecap.com, just hampshirecap.com. You can, of course, you can find me on LinkedIn and Facebook and all the other, places you can find folks online. Shane Carter, NH. And would love to connect and help people on their journeys.
Okay. So I'm going to repeat this. Shane Carter, NH.
Yeah. If you just type that into LinkedIn or Facebook, I'm sure I'll pop right up. And then our website is hampshirecap.com.
Hampshirecap.com. Okay, excellent. Well, everybody listening here, I want to thank you also for listening and also watching if you're watching it. And Shane, thank you again, too. This has been awesome.
My pleasure.
If you could please leave a review, listeners, if you don't mind. We really love your reviews. It means a lot to us. It's actually what makes the podcast world go around. You don't pay for it. We don't make money doing it. Indirectly, Shane and I get to meet each other. We'll do business together at some point, and you can too. So if you leave a review, that helps us keep going and growing. But in any case, take care of yourselves. God bless you and your loved ones, and we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.